In all due respect, is a very poor way of looking at it. If you're going to say all our companies or AI companies, right, there's going to be a few that actually benefit massively from AI. And then there's going to be a million that maybe benefit a little bit. It's no different than saying, the iPhone revolution, the smartphone revolution. Oh, all my companies are mobile companies, right, because they're going to come out with an app. Doesn't mean they're going to benefit in any massive way or game-changing way. Everybody launched an app, right? JP Morgan launched an app. Amazon has an app. Meta has an app, right? Facebook, Instagram, WhatsApp. Like, everybody's got an app. Some benefit it more than others. And that's the important thing. Everybody's a mobile company nowadays, right? Which was the big talk, especially when I got in the market. We're talking 08, 09, 2010, 2011, all those first few years of me being in the market. Everybody was like, what's your mobile strategy? What's your cloud strategy? Everybody was a mobile company. Everybody was a cloud company. But who actually benefited from that in a massive way? Who changed their business models forever because of mobile, because of cloud? Well, I can tell you Apple certainly did, right? I can tell you another company that did. Microsoft certainly did. I can tell you another company that changed their business model forever and actually benefited hugely from that. Amazon, right? So everybody can benefit maybe a little bit from AI. Doesn't mean they're an AI company. There's very specific ones that products are going to serve a huge purpose and are going to thrive massively. Obviously, NVIDIA is a good example. In my opinion, Palantir is a great example, and we'll see that over the next couple years here. So yeah. Now, Ulta, one of the greatest companies literally in the stock market, is down 7% plus after hours. I got to look in depth at their numbers. From what I saw, an initial look, didn't look that bad. But I don't know. I'm going to have to retake a look here and see what's going on with Ulta. Remember, this is a stock in 2009 that was $5 a share. 5 flipping flapjack and dollars a share. So I'm going to take a peek there and see what's going on in regards to good old Ulta here, folks, okay? Is the sentiment of the market changing for the better, right? We can take a peek at that. This is from our investor report that we put out every single Friday inside the private group. We put out this very comprehensive report that looks at a ton of different informations and things like that. This is just one of a million slides we got in there. It just takes a look at AI investor sentiment. And in terms of this is where we're at right now this week, okay? So this is how investors are feeling for the stock market for the next 6 months. Now, these numbers have been horribly bearish for basically a year now at this point in time, okay? And we're still no difference, okay? There's only about 27% of market participants are bullish on the market for the next 6 months. Almost 33% are neutral, so they're not bullish or bearish, right? And almost 40% of market participants are bearish on the stock market the next 6 months. It's been like that for a year, folks. Okay? And in terms of the 1 year bearish high, we hit that in September, right? September 21st, 2022, which, by the way, you should have been loading the boat on stocks in late September and all the way into October, November. That was a phenomenal time to be a buyer of stocks. Usually whenever the sentiment gets insanely bearish, almost every single time you're buying, and this is why this market is so hated. Because everybody's been so damn wrong. That's a fact. The bottom line is when it comes to sentiment, they've been dead wrong for over a year now. They've all thought we're going to be tanking more and more and more and more. And meanwhile, you look at the NASDAQ, you look at a lot of the biggest big dog stocks out there, and they're doing tremendously well. Their earnings haven't, fallen to pieces, and they're actually going to get a lot better. We'll get into that in just a moment. And the bears are out there looking, and they're just kind of in delusional mode, right? They've been wrong. That's why this is how you get into such a hated bull market. This is the most hated bull market I've seen in terms of the NASDAQ stocks, probably since I've been in the market, because people are looking and they're so badly positioned. They're all piling into oil and gas type stocks and the safety plays in the middle and the end of 2022. And they're all piling into short positions, put option positions. This is where everybody was piling money. And now they're looking and they're watching these easy money stocks go up 50%, 100%, 150% in a snap of fingers. And they're looking and they're like, they've lost everything in terms of short positions. They've lost everything on put options. And in terms of their safety stocks and the oil and gas stocks, those sorts of companies are not doing well. Their stock prices are down significantly from where these folks were buying them. And they're screwed. Because now they're looking like, wait a minute. I wasn't buying NVIDIA at 108, but do I pile into NVIDIA now at 380? They're screwed. They don't know which way to go. And if rates drop, it's going to get way more extreme. because then you're not even going to be able to earn any good money on treasuries like you've been able to earn recently, right? And we know if rates drop, guess what else is going to drop? Savings accounts. So all of a sudden you're looking and you're like, crap, what do I do now? What do I do now at that point in time? And especially if the economy hasn't fallen to pieces and we don't have unemployment of 6, 8, 10%, what do you do at that point in time? Then you're sitting on cash while it gets devalued constantly. You're not long the market. You're watching all these companies prosper. Their earnings coming better and better and better. Your doomsday scenarios weren't playing out. And you're screwed. And this is how you get the most vilified, hated bull market we've seen. And I can tell you, it can get a lot worse than this. And I mean a lot worse in terms of the hatred of this bull market. Oh my gosh, you haven't seen anything yet. If you think this is a hated bull market, just wait. That's all I got to say. Just wait on that. Now, let's go through the most powerful companies in the market. The ones that shake the market, the ones that move the market up and down. Okay? What's going to happen with these companies' earnings in the back half of this year? I'll tell you exactly what's going to happen for all 10 of the most important companies in the world for their earnings per share in the back half of this year. Microsoft's going to be up very nicely. Apple is I would call it a wild card. Could be down, could be up. I don't know. Okay. Wild card for Apple. Amazon's going to be up substantially in the back half of this year. I mean, you're going to see their EPS and net income climb like you haven't seen it climb in years. Nvidia, oh my gosh, you haven't even seen net income in EPS until you see Nvidia's numbers in the back half of this year. Google McDougal, I've seen ad rates really stabilize and actually start moving up here recently on YouTube. That's definitely a good sign in my opinion. Also, from what I'm hearing from several different sources, the advertising market has stabilized, and if anything's getting slightly better now. Not like great, but a little better, which is important. So don't be surprised at all if you see Google earnings improve quite a bit in the back half of this year. Meta, oh my gosh. Wait till you see Meta's net income in the third quarter, fourth quarter, first quarter next year. Oh, baby. When you see that growth, socks are going to be knocked off. I think Tesla's a real wild card on what happens with their earnings per share. Broadcom, I don't follow the company close enough to really have a strong opinion either way on Broadcom. In Pepsi, I'm pretty confident you're going to see their earnings per share and their net income go up quite substantially in the back half of this year. So which means if all these companies are going to report these great earnings per share and net income in the back half of this year, which is what's going to happen, how do you get the market down in a situation like that? It's very difficult. Very, very difficult. Especially when the market's already so damn fear-driven. If the market wasn't so fear-driven, then you would say, well, maybe there will be fear that creeps in. Yeah, maybe all these companies report really good numbers in the back half of this year, but maybe some fear creeps in the market, and that pulls the market down in the back half of this year. The problem is you've already been insanely scared for over a year now.